again. I've had a lot of questions on my group about divergence, so I thought I'd quickly do a video for you guys just to explain divergence a bit for you guys. What divergence basically means is if the price moves in one direction, but your indicator or your oscillator starts moving in a different direction. Normally the oscillators will move in the exact same direction as the price. But once they start moving in different directions, this is what we call divergence. And this quite often points to the market running out of momentum. And it's sometimes a signal that the market could turn around and go the other way. There's a few oscillators that people are using. I'm going to just run through all of them quickly. The most common ones are the MACD, the stochastic, and the RSI. And I have them all on you on this chart. Now, if you're looking at the pound dollar daily chart, as you guys can see, the market makes a low over here and a new low over here. So the market is definitely making new lows. But if you look at our oscillators, let's take the RSI. It made a low over here, but then at the next price low, the RSI is actually sloping upwards. And this is what we call divergence. The price is sloping down, but the RSI is sloping up. And this is what we call bullish divergence, because the price is moving down, but it's pointing to some, the bearish momentum running out and the bulls taking over. So this is why we call it bullish momentum, bullish divergence. If you look at your stochastic, the same thing happens. The stochastic is right here at the bottom, slopes a bit up while the price slopes down. The third indicator I got on here is actually the one that I use. It's the MACD, just the histogram. I don't put up all the signal lines and the moving averages, but the same thing. I prefer to use the MACD because it's the clearest to me. As you guys can see, price diverges and then shoots up. I'm going to look at some bearish divergence quickly. We got some bearish divergence here on the euro dollar. As you guys can see, the price keeps on moving up, makes a high over here, makes a new high, but the MACD is sloping downwards. Now, I want to stress this: just because you see divergence doesn't mean you should just quickly jump in towards the other way. I personally only use the one indicator, the MACD, when I trade, and it's basically just to spot the divergence, but I don't use it as a signal to jump in or jump out. The way I typically use the divergence in my trading is if I see, this is bearish divergence, I would not trade into it. I would not be looking to go long at this point. If anything, I would rather look for some signs of reversal and trade the other way, but I won't be trading into divergence. Let's quickly have a look at how we can use this in our trading, especially the supply and demand traders, or from a supply and demand point of view. There's different ways you can trade divergence, but I'm just going to show you guys my way. This is a USD CAD daily chart, and it's definitely in quite a big uptrend, as you guys can see. Market makes a nice high over here. MACD also makes a nice high over there. Just moving forward, I'm just gonna mark off this high. Moving forward, you can see the price breaks that high, makes another high, but the MACD is all the way at the bottom. Now, let's get back here. As I stress, I don't just jump in when I see divergence. I need to see some momentum change, like a momentum candle, and I like big engulfing candles. I use it most in my trading. So you have to wait for some sort of signal, and you can check there. That's quite a massive engulfing daily candle. It engulfs 1, 2, 3, 4, 5, 6, 7 or 8 days of price action. It actually engulfed it in one candle, and this to me is a sign that now the market is trying to go the other way. So typically what I would do is, let me just mark off this point, is I would jump a couple of time frames lower, sometimes one, sometimes 2 time frames lower, and look for the areas of supply and demand to get in on the retrace. Now, sometimes the price never comes back and you don't get in, so that'll be a missed opportunity, but that's fine. I prefer to just wait for the retrace and get some good risk reward. So moving to let's just move to the 4 hour quickly. Let's find that spot. So as you guys can see here, the price makes the massive jump down. Okay, and you gotta figure out where this whole momentum starts. So the candles that got engulfed was this whole area here, and you can mark that off. This is the start of my supply zone and the end of my supply zone, and you can just set a pending order. And I normally try and get about 3-to-1 risk reward, but we're going to just look at some targets on this one. And you also want to make sure that some lows were taken out. I mean, you've got an uptrend line here. This would be the most significant low, this one over here, and the price definitely breaks that low. So all signs point, towards the downside. Momentum has changed. Even if you look on the 4-hour, which I really like, is if you have double divergence. We have the divergence on the daily, but we also have divergence on the 4-hour. So both time frames are telling me, that the momentum is changing. So if you use that zone as your entry and your stop loss line, you guys can see it makes a nice comeback to that area. And like I said, I normally try and get about 3-to-1 on my money. But if I look to the left, there was quite a strong momentum candle here. So I might have been tempted to just take my profit just above this zone, just to be safe, or above this one. But yeah, moving forward, you guys can see it would have made target quite easily. I think it made another attempt at that area, but the sellers were in control again, and then the price just dropped again. Obviously, you guys can see that the second attempt was a bit deeper. I normally don't really trade the second visits to the supply and demand zones. I believe the first ones are normally your highest probability trades. Yeah, that's basically so. Just to summarize, you try and look for some divergence, look for a clear signal that the price is changing, and then you try and get in on the retrace, supply and demand style. If you guys have any questions, just let me know. Hopefully this video was helpful. Thanks, cheers guys.